On? It's Kyle from K Capital with Sunday's video. It's going to be a quick recap of the overall market, one new position I'm looking at, and then a very quick summary of our open positions. The last couple of weeks have been really good. We saw some great winners. We're in a few good winners. So we're definitely rallying pretty nice through November. So far, there's definitely some, decent opportunities out there, including the positions we are in. But let me get right to it. So TTI is a new stock that I found on this morning's scans. It's a really nice setup here in terms of a few things. For starters, the volume. Volume has definitely ticked up over the last couple of days. We saw a nice breakout here last week, specifically Friday, to where we completely broke through the 200 EMA moving average. As you can see, once we broke through here on the downtrend over the last couple of months, it really just shot all the way down. Actually, 50% drop since the 10 to 11 close at this point. We formed a nice base. We rallied over past couple of quarters, and we really bounced across the 200-day moving average. And finally, you can see we consolidated over the last 2 months and finally broke out. So I think this is going to be a nice opportunity because, frankly, the volume here is really picking up. I think, the earnings have been pretty decent over the last couple of quarters. So fundamentally, we should be in a good position to go long this week coming up. And, the initial target probably would be in the 9 to 950 range, right around this level here. The reason that's obviously the target is you can see a lot of consolidation here over this period. I guess that's early October of last year. So what that means is, there's probably still buyers and sellers here. But right now we can see that we're forming a nice breakout in terms of this pattern. So this is something I'm definitely going to look to add to going into this week. Obviously, it's going to be contingent on the overall market, which we can get to right now. So, you don't want to trade against the overall market. You want to obviously go long when the entire market is behind you. You don't want to really, swim against the current, so to speak. So if we look, obviously I've talked about this a few times. We had a nice breakout over the last 3 weeks across the 200-day moving average in the Dow. We really have just rallied ever since then. So naturally, I'm going to expect some form of, pivot downwards to where there's going to be significant profit taking. But the overall trend is still bullish. The 200-day moving average over the last 2 or 3 years has really served as a great indicator of that. We hit August and we just rallied all the way down. We obviously took some hits there, but we rallied all the way back and we're making significant profits in our longs right now. So if we want to really indicate what's going to happen here, I think in the short term, I still expect some profit taking and a pullback maybe to the 17,600 level. But I think overall through the end of the year, I think we should rally pretty nicely to 1,800. If we look at the the Russell 2000, it follows a similar pattern. The only kind of caveat here is that we have broken through the 200-day moving average as of last Friday. So I think in the short term here, unlike the Dow, we should see a rally up to 1220. I think it's something that definitely can happen quickly. And the reason behind that is, the EMAs are all pointing up now and they all crossed in the pattern that we want. The next step is to have all of these rally above the 200-day moving average. And then we'll be in really another short-term bull trend. And I can kind of point to, back in 2014 of November, the same thing happened there. We rallied against the 200-day moving average. We crossed against the 20 to 50 EMA, and then we just rallied all the way up to 1,300. So, that was definitely a period where you wanted to go long stocks, and I think we're going to, walk into that period now through the end of the year. So it's going to be a good time to be, long small cap to mid cap stocks. And if we want to really dive into that, we can go through our specific alerts. I'll do this quickly, but I'll obviously touch upon this on the dashboard. But my favorite position right now is EMKR, MGPI, and ACXM. Right now we saw a nice break in EMKR of this flag pattern that I alluded to last week. I really think this hits 8 to 850 soon. Fundamentally, I think this could be easily at 10. If we want to pull back and take a look at really the bigger picture here, the stock has gotten beaten down over the last couple of years. Zoom in a little bit. I want to go back a decade. And if we look at this, the 200-day moving average in 2011 was huge. We broke through that for the first time, if you think about it, in 5 years. So it's a turnaround story here that I think could be really, really large. To get back to 10 to 12 is not unheard of for this. You've never really seen a setup like this in this position for this company to where, the 200-day moving average served as such strong resistance historically, and to break through that on really strong volume, it's a pretty nice chart. And obviously, as you can see, we're really just stair-stepping up to, I'm hoping 10. Do we get there by year end? I don't think so, but I think we get to at least 8 plus soon. And honestly, that would be a 30 to 40% return for us. So, I think it's a position that's definitely going to be, a nice winner for us. We're basically getting to that point now. Obviously, it just really was a matter of being patient with the pullback here. So let's go back to the daily real quick and look at some of our other positions. Jack is one to where we got closed out during earnings call, but we went long again in the 770s to the low 780s. So we're right around break even here. If this doesn't hold next week, then we're obviously going to close pretty much break even. But as I alluded to a few times, the 200-day moving average is now serving as significant resistance. It was significant support. Naturally, once you break through it, it just flips. It turns, your support turns into resistance. The 200-day moving average is really just always a key indicator of that significant level of support or resistance. So it's something that we have to watch carefully here. We're still, I think, at a little bit of profit here, but, under, I think, a 10 or 12 basis points. Next is MGPI, which we are up from our original alert, 12%. We've added to this a few times. Again, I love this chart. I have since the beginning. Similar to the other positions, the 200-day moving average served as a really nice indicator of the trend, and then we have certain volume indicators we scan for that really just popped out into our scans, and we went long right around 16, I think. We've added to it a few times. Naturally, again, you want to add to your winners, you don't want to add to your losers. So we're sitting at a nice profit here from our original alert, and we've added to it twice. Another is ACXM. This is one that I think could be a long-term play. It already is, but we went long around 20. And the key indicator here, just so people that are taking notes, we broke through the 200-day moving average on high volume. You don't want to go long right after that. You want to wait for the pullback. It's exactly what we did. We went long right around 20, I think right in this level here, and we saw a nice rally all the way up to, we touched 23, but of course you're going to see profit taking. So we're going to be patient with this one too. If we break this level of 23, we'll definitely add to this, and the initial target right now is 25. Next is Penn, which is another winner. I think we're up. I'd have to go back and check, but I think we went long at 16, so we're up, I think, $1.77 right now. This chart, as you can probably already see, is mimicking MGPI exactly. It's bouncing off the 200-day moving average, so it's something that I think could be a nice winner. So, again, this is one that's mimicking MGPI. I think this could be a nice winner as it consolidates here. But we went long at 16. We saw it rally a little bit and pull back. And I think this might be an area either to add to or to just be patient and let it play out. But I think we definitely test 19 here, where we'll start to take some profits. And finally is Crown. We sold half a Crown for 25%, which is a huge winner for us. We're starting to test 6 again, which I'm actually, to be frank, really surprised at. I didn't expect this to rally off of this point. Once we sold off here and stops were taken out before the earnings call, I really expected this to more or less trade sideways, but it hasn't, which I think is a testament to the fundamentals from the earnings release and what was really issued. So, this is a really, really nice breakout here that's testing these highs. So I think, if we can pull back here and take a look at the resistance, I mean, frankly, there isn't any. So I think this could just keep going to 650. And this is exactly why, we sold only half the position for 25%. We're going to let the rest ride. So if this gets to 650, you're now looking at a 35%-ish return. So that's really great. It's something that, a huge winner for us, especially in a market that has traded sideways. We went in this right in the midst of, a really, really big downturn. And so we just rode this out for the most part through a time period that was pretty negative in the overall market, at least back in August. So congrats to anyone who traded that. But right now, we're definitely bullish on the overall market. We're just going to be slightly cautious because we have, been a little bit overextended in the Dow. But in a small cap space, we're sitting in a nice area because I think the Russell will rally now that it's broken through the 200-day moving average. So, stay patient. Obviously, we'll have new alerts tomorrow. I'll have the dashboard updated tonight with the new charts. and I'll start to break down that new stock we just went into to give you guys a taste of what I'm really looking at tomorrow morning for new positions. So if you have any questions, please shoot Kyle Matthew at kcapitaladvisors.com an email. Happy to discuss any of the positions of the overall market. Just shoot me a quick call or a quick email and we'll talk about it. So I will talk soon, and have a great Sunday.